So, welcome back, friends. Once again, we had a very good rally on Nasdaq today, supported by the chip stocks, which have been kind of dithering over the last few days and weeks. So, we had the Nasdaq climbing nicely, the Dow also uh, up over 100 points, and everything seemed to be back and charging, right from Micron to AMD, all this, even Intel, and the semiconductor index was also up more than 3.5%. Now, I believe that trend should continue over the next few days, tomorrow and day after. But what about a long-term outlook? What is the long-term outlook for the US stocks? Is this AI-related rise in stocks? Is this something that is here to stay? Is it sustainable, or are we expecting a mid-course correction or even a longer-term correction? There are a couple of factors which say that we have some more steam left. The reason being that some of the biggest IPOs, like Anthropic, like the OpenAI, have yet to come on the center stage. Till that time, the markets would remain jubilant, buoyant, so as to attract investor attention. But where can the entire script go wrong? What can really change the course of events? There are many things. I list a few of the reasons why this entire trade can eventually falter. First of all, we have the investments which are taking place by various companies such as Nvidia and OpenAI and each other companies. So there's a circular trading and circular investment that is going on. For example, Nvidia is investing in OpenAI so that OpenAI can then go ahead and buy the products of Nvidia. This type of circular trading was seen in the time of the dot-com bubble. So be very careful. That is one reason. The other is that we have a new scheme introduced by President Trump today, that $1,000 will be deposited into the accounts of every baby who has been born in the United States between 2025 and 2028. Parents can invest $5,000. The employers can put in another $2,500. So this whole thing will grow tax-free until the child attains the age of 18, when it would be converted into a regular IRA account. This is all very good. Something which is commendable. It's an excellent move to encourage long-term investing. But what can go wrong in this whole thing is that if the cycle changes somewhere in the short term, then the incentive of people to invest, rather than being an incentive, can turn out to be a disincentive. I'm sure that the Trump administration and the Federal Reserve will do everything to try and reduce interest rates in due course, I believe short term, and try to encourage the market. But there are factors which can still go against. As I told you, just explained, the circular trading, the circular investments is one of the reasons why this whole thing can go wrong. Third is the private debt. The dot-com bubble, so as to say, was financed out of various IPOs that were coming out at that point of time. Right now, the money is coming in from private debt. Now, this is very dependent on interest rates. Interest rates which are there in the United States, very low still, but should there be a situation where the inflation starts going up, and that is highly likely, because although the West Asia crisis has reduced substantially, you find that lot of the inflation gauges in the US are based on consumer price data, wholesale price data on inventory, which was an old inventory. The new inventory that is going to come and replenish the resources is going to be higher priced. That's not going to be very easy that on the inflation indices, which can therefore go up. If that goes up, then there could be a pressure on the bonds, the 10-year bonds, the 30-year bonds, whose yields can rise. The increase in interest rates can prove to be quite a problem for many of these AI related stocks because they are dependent on low cost money. If the money becomes expensive, which I believe it will be difficult for them to finance billions of dollars of data centers, and the return that they would be getting will not be commensurate with the amount of investments that they are putting in. So please be very careful. That will turn out to be another red flag. Fourth, many countries across the world, you must have seen, even like India, are now opening the doors to foreign investments. So you have the National Stock Exchange in India, for example, now beginning to examine the possibility of, and not just beginning to explore the possibility, but actually open the doors to investments in international waters. So you have the stocks which have run up so much over the last few months and years, the semiconductor index, the ETFs which have run up so much. People would be catching all these stocks at the late stage of the rally, and that can be quite detrimental not only to the people who are investing, but because there's going to be an overcrowding in these fields. And history has suggested that whenever there is overcrowding which takes place in any asset class, just you can go back a few months and see the examples of gold and silver. Whenever an overcrowding takes place in any asset class, that particular asset class tends to correct and correct significantly. We saw silver correcting over 50% from its high. This is also consistent with the physics laws of thermodynamics, which says that when the entire attention goes towards a particular object, then that object tends to change its location. So, consistent with and applying the laws of thermodynamics to the instant case, we believe that there's a possibility that all this too much attention that is going into the semiconductor index and how international funds can move into the US markets will lead to an overcrowded trade, and this itself can lead to a significant correction. So be very cautious. The AI story is not over. In fact, you're seeing that some of the healthcare stocks have started going up because now the attention is shifting from the hardware to actual application of artificial intelligence. At the same time, the AI related stocks look to be overvalued, consistent, and with the financial performance of companies. They're investing in such huge amounts, and many of these investments are circular, as I've just explained. And this call can trigger quite a sharp correction. As to when this can happen, do join our Prime Plus Telegram group, which is specifically addressed to the US stock markets. And you can do that by WhatsApping us on 732 732 2720. Have a great investing week ahead. Take care. Bye bye.